Awesome. Well, welcome everyone. So today we are going to dive into a topic of something that's moved from theory to practicality in the industry a lot faster than expected, B2B stablecoin payments as real enterprise infrastructure. Today we have Nassim here, who is the co-founder and CEO of Bastion. Before founding Bastion, Nassim was a CISO at A16Z. He's held senior roles across Facebook, Apple, Anchorage, and which I think gives him a really interesting perspective that most people in this space don't necessarily have. So really excited to kind of dive into the topics today. Before we go into it, Nassim would love to give you a chance to maybe introduce Bastion, what you guys are working on.
It sounds great. Thank you so much, Ryan. Thank you so much for having me here. Bastion is the ideal partner for the stablecoin journey for enterprises. We have a full stack solution to custody, offer wallets, on and off ramps, stablecoin issuance for all of the enterprises and institutions that are excited to tackle the stablecoin journey and integrate stablecoins.
Awesome. Yeah. So really excited to chat. So I guess the first question, stablecoins were not originally positioned as a enterprise payment infrastructure. A lot of it was DeFi yield. What has changed in 2026, do you think, that made B2B payments as one of the most credible real world use cases?
Yeah, it's a good question. The stablecoins were really this kind of crypto product, as you pointed out, and then I think that the regulatory clarity movement that started in 2025 actually started taking all those stablecoins from, hey, this is some kind of crypto product used to trade and kind of like keep stable value in DeFi and trading venues, to actually being a core payment instrument of the future for enterprises, for payment companies, for fintechs, for marketplaces, and more, because that becomes a trusted payment instrument with the regulations. And so we saw it first with the Genius Act, and now we're seeing in the US the Regulatory Clarity Act that kind of like formalizes where yield and rewards associated to stablecoins can actually be distributed or not. And we've seen a lot of those banks, fintechs, in 2025 starting to build their understanding of stablecoins. And I think that they entered 2026 with a clear view of, this is my strategy, this is where the stablecoins are the most powerful for us as a business, and this is what we're going to do with them. And so now enterprises stopped asking, is this allowed? Should we even be using those things? To, okay, now who do I need to hire to go build this thing, or who do I partner with to go build this thing? So I would say that regulatory clarity, and not just in the US, Japan, South Korea is working on it, Brazil, many parts of the world have been building their regulatory framework across 2025 and the beginning of 2026.
Absolutely. I agree as well. Regulatory unlocks innovation, which unlocks adoption, which leads to more innovation and further regulatory clarity. Hopefully that is very supportive, and definitely net positive for the industry. A second question, why did B2B payments, in your view, become commercially viable sooner than many expected, while more consumer facing, more speculative stablecoin narratives have taken longer to mature?
I think that it has to do with B2B having clearer pain points on one end. So you have higher value payments, slow settlements. If you think about those B2B use cases where, let's say that you're a global company and you have multiple entities around the world and you need to constantly move large sizes of money between those different entities, right? You're going to have trapped liquidity in a lot of different currencies to pay for your expenses, to pay your employees, to pay the rent, to pay a lot of your suppliers and vendors. You're going to have a lot of trap liquidity. And moving in and out of this trap liquidity is very expensive. You need to do a lot of planning ahead of it. You have the FX friction, you have reconciliation, right? Reconciling all of the money that you hold across all these entities. Like the B2B use case has so many pain points that are not entirely solved by stablecoins, but a lot of them massively alleviated, right? Because you can actually have 24/7 money movements, keep all the reconciliation extremely simple because the blockchain does the work for you and the ledgering and the auditability. And you can actually now hold US denominated, or it can be a local stablecoin at each one of these sub-entities. And so now the trap liquidity decreases, the FX friction is much lower, settlement is 24/7 and instant, reconciliation is much faster. So I would say that like businesses had like more pain than consumer payments, and they're able to tolerate more complexity if the ROI is obvious. And so I think that we're seeing a lot of businesses who are willing to invest more because the ROI is just so high.
Mhm.
And so we're definitely seeing that. Yeah.
Yeah, for sure. The pain points in B2B payments are very much almost table stakes issues that needs to be solved versus for more consumer, maybe the current payment systems they use or current systems they use are generally okay. And I do think the complexity is an issue. So, more as we build out our payment solution with blockchain as the core infra, I think taking away complexity in onboarding or UX while still making sure that those pain points, those table stake pain points are being solved properly is really the key to, sustainable growth for stablecoins for B2B payments. And so,
Yeah.
you kind of mentioned that this is a much better if stablecoin payment rails beat traditional kind of payment systems for B2B, and I think cross-border is a big one here. Where do you think things are still falling short? Where do you think there still can be innovation or advancement?
Yeah, I think that I mean obviously the stable coins just win at 24/7 settlements, high value cross-border flows, well-defined corridors where you can optimize the liquidity, right? You have just faster availability of funds, you have fewer intermediaries, everything is programmable in terms of reconciliation. And so I would say that we're definitely seeing a lot of wins in those kind of like selected corridors. Um, Generally, I wouldn't say that stablecoins lose, but I think it's falling short for now, specifically in terms, and it's just kind of like a nature of how expensive it is to move liquidity from traditional financial rails and traditional financial systems on chain, right? I would say that on one end you have fiat last mile coverage that takes time. You need to have a lot of companies, stablecoin infrastructure companies, that go jurisdiction by jurisdiction, uh, um, and get local banking partners who are willing to actually perform the conversion from a stablecoin to that local fiat, and then the fiat disbursement and payout to that local business or local person who wants to get to receive funds in fiat. So I would say that the last mile coverage definitely. Regulatory comfort, we're getting there. It's taking, I think, time. The problem is really around the fragmentation, right? I think you take any two countries in the world, and you won't have the same regulatory framework. And so it will take quite a bit of time to kind of just unify those, or at least like build some passporting rules, because stablecoins are global in nature. And this is something that we had to deal before. And then finally, I think liquidity. Liquidity for the stablecoin to local currency pairs. This is definitely, and whether the local currency is in the form of fiat or whether it's a stablecoin, I think that we're going to need to build more liquidity And this is why taking it corridor by corridor is a very good approach, because you're building liquidity that actually decreases the cost of getting those payments out in that local currency. So I'm very excited for a lot of FX markets to move on chain. This is going to take time, but I think that it will ultimately happen.
100% agree. We're seeing a lot more local stable coins being kind of, getting regulated, or regulated local stable coins being announced. And I think FX is one of those, especially on-chain FX is one of those things that hasn't necessarily been fully cracked yet. Liquidity being one, the proper kind of on-chain mechanism, whether it's RFQ or order book, how does funding rates work, and then how do you work with different jurisdictions and regulations for that last mile delivery? How do you off ramp? Are all things that is very necessary to figure out. That I think collectively everyone's kind of working towards that. And yeah, definitely agree. So I guess then what part of the treasury or payment workflow usually needs to get redesigned first before a stablecoin powered B2B payments can operate reliably in production?
I think that it will be accounting and reconciliation. Um, we can get wallets in the hands of enterprises in a matter of hours, right? It is really easy on top of Bastion, for example, to build or to kind of like attribute wallets to your different entities worldwide. If you have your own clients and you want to onboard them, we kind of like have everything built in for KYC and account management and wallets and all those things. The reality is that there's a bridge that needs to happen between where the fund sits and the source of truth of who owns what, or kind of like the invoices, the counterparties, the payments instructions, all those things need to be tracked. And I think that the reconciliation and accounting piece is the one that is having the is going to have kind of like the most changes. We're seeing, the Treasury and SAP and a lot of kind of like ERPs um, start to build those stablecoin integrations, but ultimately there's going to be a tremendous amount of work because it touches taxes, it touches invoicing and account payables and so many parts of the company that I do think that this is probably going to be the part that is going to get redesigned first, really.
Do you think it gets redesigned where they are still able to keep parts of their current SOP while integrating blockchain solutions? Or do you think that the redesigning needs to be kind of the entire system becomes on-chain?
I don't think you can expect enterprises to have tools that get entirely redesigned. I think that this part of the system is notorious for not changing much, right? This is probably companies that set things up 20 years ago and don't expect anything to change in the next 50 years. I think that there will be a lot of integrations that need to happen. There will be a lot of work that happens behind the scenes from those solution providers to build the infrastructure that kind of keeps the interface similar, that still feels like a traditional uh, accounting system and ERP system. But behind the scenes, a lot of integrations are going to need to be built to account for entirely new payment rails, entirely new custody solutions, entirely new money movement workflows that are going to be highly orchestrated across chains, across systems. There might be like a mix of TradFi, FX plus some on-chain leg plus another fiat leg plus something else, and so we're going to need, I think that we're going to see a lot of work happening behind the scenes. The complexity is going to be in keeping the interface the same to not kind of scare the enterprises away.
Yeah, 100% agree. In my personal opinion, is payment flows and working with traditional payment partners. One of the keys is ensuring money comes on chain and is able to leave the chain properly, like we discussed earlier. And another thing is that you cannot ask your partners to change their current setup or their current kind of the current way they do their business. That the best solution is to make it as similar to their current experience as possible. Do you think there's things like, for example, within the reconciliation process or accounting process that would never be on chain, would never get adopted? It would just forever stay within the kind of traditional payment methods.
I think that the governance and the operation security will keep happening off chain rather than on chain. So, for example, you need three parties to approve transactions above a certain threshold.
Mhm.
If you have certain requirements around whitelisting destination and kind of like recipients, I think that those things are going to stay off chain. I know that there's been kind of companies trying to build with like Gnosis Safe and different things, kind of like on chain constructs for this. Having worked in security engineering for a tremendous amount of time now, at probably the most sensitive levels possible, and in trust management, I would say that there's a lot of value in keeping those quorums and kind of policies off chain and keeping them kind of very fluid. You want to constantly be able to update them without letting the world know that you're updating your policies. That might be kind of like leaking some type of information to the rest of the world. So I definitely do think that all the governance and kind of like the operation piece of it is going to be security operations, especially is going to be that touch, obviously compliance and finance and a lot of other aspects is going to stay off chain.
Hmm. Got it. We kind of talked about this a bit already. But just in case there's more to add and kind of thinking with workflows, especially in banking, workflows, when enterprise partners compare stablecoin settlement with their corresponding banking workflows, what ultimately matters most in practice? Is it liquidity, efficiency, operations control, cost, speed, or reconciliation simplicity?
It's hard to stock rank, honestly. I think that the operational control and reconciliation at scale are very powerful. I don't think that you have got like two. It's really interesting because like you're essentially thinking as a large enterprise, how much am I saving versus how
Mhm.
much additional revenue am I driving, right? And so I think that generally companies struggle more in cutting costs down versus adding to their top line revenue.
Mhm.
And so from what I'm seeing, I do think that the reconciliation, simplicity, and operational controls are going to be the most powerful in practice. Um, and especially because liquidity is not fully built yet. So I think that it's going to be a little while before the stablecoin costs are 100x of the alternative. There's also in practice today the limitation of um, does both the recipient and the sender have stablecoin wallets, or one of them wants to receive receive fiat, sorry. And so I think that the off ramp is where a lot of the costs happen. But ultimately, if you live in a world where you can move money between stablecoin enabled wallets and entities and people, then you get this 100x kind of experience
Mhm.
compared to the alternative that is 24/7 instant free. Um, and so I do think that the speed and cost is going to happen a bit later when
Mhm.
there's just more distribution, and it's going to happen. It will take some time for the technology to diffuse in
Mhm.
society.
Yeah, for sure. Because right now it's a lot one side on chain, other side, like you mentioned, wants fiat to have the entire flow be stablecoin. Stablecoin means the adoption has to be very like across the board. Everyone has a B2B, and we're just probably not quite there yet.
Exactly.
Yeah, and so I guess in real deployments, where do implementations usually get stuck first? Liquidity management, compliance review, operation ownership, and then counterparty onboarding or reconciliation design to just give some ideas.
I think that it is still at evaluating the risks. And risk can be pretty broad, right? That touches finance, compliance, operations, sometimes reputational, right? Like there's reputational risk to doing something in the space and who you do it with and on which chain. And if anything happens to the chain or the currency and it depegs, like, and I think that like everyone is trying to map those out in terms of like enterprises and institutions, which is really important because all those companies are risk managed companies, right? They have more to lose than to win by adopting stablecoins. At least, like, this is how they perceive it.
Mhm.
And so I would say that it really is about the risk management piece. We're trying to build a lot of tools at Bastion that help manage those risks. We
Mhm.
have, for example, licenses, right? That we have money transmitter licenses across many states in the U.S. We have a New York Trust Charter. We kind of like build a lot of that experience and expertise and compliance and security and vouching. Sorry, doing a lot of due diligence on all of the pieces that we use and integrate with, and really helping that evaluation from a risk standpoint. But we're seeing some of the largest companies, adopt stablecoins and push in that direction, right? We work, for example, with Sony Bank, right? Sony Bank is really widely recognized as like a very successful bank and part of one of the largest ecosystems in the world. And like they've been able to kind of like go through that journey. We see a lot of other banks and institutions that are able to go through that risk evaluation journey and successfully. So I do think that it is going to get easier and easier.
Got it. Do you think the risk part on some level still comes from an existing distrust of blockchain technology, of Web3, of our ability to properly, work with like travel rule, KYT, KYC, and all of those kind of concerns?
Yeah. And I think that we've had, let's be honest, I've been in the crypto space for quite a bit of time. We'd had our fair share of issues in the space, and I think that like it's on us to keep proving again and again that we deserve essentially this trust from those institutions and enterprises, and ultimately we're going to be a very successful industry because we're probably the most resilient industry, I think, like that I've ever seen. And so everyone is pushing very hard on compliance. The entire industry is pushing for safer blockchains, more reliable blockchains. Remember when the blockchains like Solana and others kind of like were breaking fairly often, you just don't see those problems anymore, right? Like Solana had 100% SLA and something for Ethereum for many years now, and I think that like it really speaks to the ability of people in the space to build technology that is safe, that is compliant, that is robust, that is reliable, that is approachable and accessible. And I think that it will make us win in the long run.
I agree. It almost feels like growing pains a little bit. We're learning to
Hmm.
be adults now. We're learning to actually self-regulate a little bit. We're learning what parts of the industry needs work. We're learning kind of what we need to add on how to work with regulation. There was a period when working with regulators anywhere is just unthink of. You're going against your industry if you go talk to, policymakers in DC. But I think that level or that kind of thinking is more or less is not as frequent anymore. And
Yeah.
so I guess kind of control framework, what does a robust control framework look like when stablecoins are used for ongoing B2B treasury management and payment operations rather than just one-off, transfers?
Yeah. The good thing is that we don't need to reinvent the wheel. Those things have been, built and battle tested for many years. So that means at the time of onboarding, you're going to want to have KYB and sanctions and kind of like whitelisting all of the addresses that may be sending funds to you or that you might be sending funds to. You have transaction monitoring and sanction screening and escalation path. Like this is all very traditional compliance, right? Approving your counterparties and wallet addresses, having role-based approvals and payments limits. I think it's like making sure that you take all the existing requirements and you apply them to the blockchain based systems. The reality is that in those systems, you're going to be interacting with the traditional fiat system. So you're going to have the same requirements applied by the same banks, banking partners locally anyway. And so, yeah, I would kind of like put it as from a pure compliance standpoint, sanction screening, KYB, transaction monitoring, and escalation path, approving and whitelisting counterparties and wallet addresses, role-based approvals and payment limits. In terms of auditability, very important. You want to have audit trails of everything that is happening. As I mentioned, some of the movement and payment flows are going to go across stablecoins and fiat as well, which means that you need to have proper ledgering in place and auditability that can take into account both on-chain ledgering kind of like information as well as off-chain ledgering information. Daily reconciliation is something that we see as very important across bank balances, stablecoin balances, internal ledgers, ERP. And then that's for when things go well, right? And kind of like happy paths. And then you also want to plan for unhappy paths. And so everything needs to be in place when alerts happen. And so that's going to be your enhanced due diligence on transactions, exception handling for failed transfers and wrong addresses. The blockchain might be going down, or the partner that connects to the blockchain might go down. And so making sure that there is kind of like proper things in place for that, as well as refunds, disputes, and so on. So I would say that this is just very standard, but saying it again and again makes everyone feel like, okay, I'm very aware of how those things happen. I feel comfortable with this model because it works exactly the same way as what I know.
Yeah, for sure. I think a lot of the current monitoring systems will and as analyze after something has happened. While we need a lot more real time, we're starting to see a lot more of solutions that offer that. We have a few minutes left, so I want to kind of look to the future a little bit as we close off. So looking ahead to 12 months, a year from now, what would convince you that B2B stablecoin payments are becoming durable enterprise infrastructures rather than a workaround for a specific corridor or counterparty?
Yeah. I think just standardization of payments, stablecoin payment integrations in ERP systems, Treasury system, and account payable systems for sure. I think that there's going to be a lot of work that needs to happen from that type of integration and kind of CFO level reporting and audit acceptance. So that part is like pretty important. There needs to be, I think, more banks who have the capability to integrate stablecoin payments directly, because
Mhm.
ultimately banks have a lot of the distribution to businesses that onboard them. You may have kind of like the JP Morgans and the Citibanks of the world, but like you also want to make sure that there's kind of like the longer trail of banks who also bank businesses that might be small or medium-sized businesses who also have the capabilities to accept stablecoin payments on behalf of the merchants and businesses, or emit stablecoin payouts to, let's say, vendors or contractors or employees around the world through those things. So I do think that like this part is going to be quite important to continue building. We build a lot of this infrastructure. Others are building this infrastructure, and I think that both building it to support directly the merchant, or powering the bank that might be banking the merchant is going to be critical. So I think that like 2026 is going to spend a lot of time on enabling banks and merchants directly.
Yeah, I 100% agree. Smaller banks and local banks as well, right? Because a lot of regions, the people there are still very reliant on their banks, while more developed regions probably have new payment systems they can use or payment methods. So local banks, smaller banks, definitely. And I guess just closing thought, anything you want to share with about what kind of Bastion's working on, things to look out for?
Yeah, this year we're going to be launching on-chain some of the largest companies in the world in the next 10 months. And so I'm very, very excited about that. More to come, unfortunately, unable to announce more right now. But definitely hoping to bring dozens, if not hundreds of millions of users on-chain who will have no idea that they're using blockchains behind the scenes. And that's really, really exciting to me.
Awesome. Yeah. Well, thank you so much for the time today. Really honored to have been able to chat with you, and we'll definitely keep an eye out for future happenings at Bastion.
Thank you so much.